Hey everyone, Thomas Costelli here, and in this episode of Tax Smart Q&A, I'm going to answer the question, is there a cap on the amount of property tax that you can deduct on a rental property? And this is an important question because as a rental property owner, you want to be able to deduct as many expenses as possible so you could pay as low as amount of taxes as possible on your rental income, right? You want to maximize your income and minimize your taxes. So this is definitely an important question. And I'm going to dive into all of that in just 1 second. But if you do like this video, make sure to hit that like button to get this video into the hands of more real estate investors and help them become tax smart. Also, be sure to hit that subscribe button and the bell icon so you don't miss out on future tax smart videos that can help you save money on taxes. All right, so the question is there a limit on the amount of property taxes you can deduct on a rental property? And the answer to that question is generally no. There is no cap. So in other words, if you paid $30,000 in property tax, well, guess what? You can deduct the full $30,000. Now, that $30,000 might create a loss on the property. And if that property has a loss and you're not actively involved and you're not qualifying as a real estate professional, there's a chance that that loss can be suspended and carried forward, but the expense is still deductible nonetheless. Having said that, I think where people are getting confused with this property tax cap is there was a rule that was put in place under the Tax Cuts and Jobs Act of 2017 that if you itemize your deductions, you're capped on the amount of state and local income, sales, and property taxes that you can deduct. And that cap is $10,000. So what does that mean? That means if you had $30,000 between property tax, sales tax, state and local taxes, you can only deduct $10,000. And specifically for the property tax component of it, that's on personal residences, all right? And a personal residence is typically going to be a property that you live in for the greater of 14 days. So in other words, 15 days or more. So there's a little bit more nuances in there that we could break down. We're not going to go through that in this video, but just know that if you're living in the property personally for 15 days or more, chances are it's a residence, regardless of whether it's your primary residence or a secondary residence, such as a vacation home. In that case, you are capped on the amount of property taxes you can deduct to a maximum of $10,000. In that case, that's typically going to be reported on Schedule A of your return if you itemize. However, on an investment property or a rental property, there is no cap. So you deduct however much money you paid in property taxes is the amount you'll be able to deduct for your rental property. So that's it for today's video. If you did like this video, again, make sure to hit that like button. If you have any questions on property taxes or can you deduct property taxes under what circumstances, go ahead and drop them in the comments or join in on the conversation in our Facebook group. It's www.facebook.com/taxsmartinvestors. We have over 15,000 members in the group and counting, and there's always a great conversation taking place on strategies and tips that you can use to reduce taxes. So we'll see you there, and we'll see you on the next episode of Tax Smart Q&A.